Uses and limitations of a trial balance. What is a trial balance? A trial balance is a statement which lists all accounts and their balances on a particular date. Each balance is placed either in the debit column or in the credit column. The totals of the debit and credit columns are calculated. The totals should be equal. A trial balance is not part of the double entry system. The balance for the inventory account will always be the opening balance. This is because the current inventory is contained within the purchases account. This is dealt with once the balances are transferred to the income statement. Example of a trial balance. What are the uses of a trial balance? A trial balance is used to check for arithmetic errors in the ledger accounts. If the balance of a ledger account has been miscalculated, it is likely that the totals in the trial balance will not be equal. Preparing a trial balance helps with the preparation of financial statements. All the balances are in one place. What are the limitations of a trial balance? Not all errors are identified by a trial balance. The totals may be equal despite there being errors. You will need to use other measures to locate errors, such as bank reconciliation statements and control accounts. Preparing a trial balance. How do I prepare a trial balance? You will likely be given a list of accounts and balances. Step 1. Identify whether each account should have a debit or a credit balance. The table below gives a summary of the different accounts. Step 2. Check that the total of the debits is equal to the total of the credits. Step 3. Write each account in the trial balance and put the balance in the correct column. Step 4. Total each column. Accounts with debit balances. Accounts with credit balances. Purchases. Purchases returns inwards. Sales returns outwards. Sales revenue. Other expenses. Other income. Trade receivables. Trade payables. Bank overdraft. Other assets, including inventory, vehicles, machinery, etc. Other liabilities, including bank loan, mortgage, etc. Drawings. Capital. Provision for depreciation. Provision for doubtful debt. Exam tip. Check the totals agree before you write any accounts in the trial balance. This will help you spot any mistakes before you write anything in the trial balance. How do I amend a trial balance? You could be given a trial balance which contains errors. The balances could also be in the wrong columns. Step 1. Correct the errors to find the correct balances for each account. Step 2. Double check whether each account has been correctly identified as a debit or a credit. Step 3. Complete a corrected trial balance. The totals will be equal. Worked example. Dimitri is a sole trader. He has prepared a trial balance on the 31st of March 2024. However, it contains errors. Dimitri. Trial balance at the 31st of March 2024. Debit, $. Credit, $. Sales, 35,471. Purchases, 17,714. Purchases returns, 1,407. Discount received, 1,895. Rent paid, 5,321. General expenses, 2,087. Office equipment at cost, 20,000. Provision for depreciation of office equipment, 4,580. Trade receivables, 9,710. Trade payables, 3,980. Inventory, 7,060. Bank overdraft, 450. Capital at the 1st of April 2023, 20,869. Drawings, 8,760. 67,933. 71,371. Dimitri has included the value of the inventory on the 31st of March 2024. The value of the inventory on the 31st of March 2023 was $2,000 lower than this value. Prepare a corrected trial balance at the 31st of March 2024. Answer. Step 1. Correct any amounts. The value of inventory should be for the 31st of March 2023. $7,060 minus $2,000 equals $5,060. Step 2. Identify whether the balances should be debits or credits. The following should have debit balances: purchases, rent paid, general expenses, office equipment at cost, trade receivables, inventory, drawings. All other items should have credit balances. Step 3. Prepare the corrected trial balance. Dimitri. Corrected trial balance at the 31st of March 2024. Debit, $. Credit, $. Sales, 35,471. Purchases, 17,714. Purchases returns, 1,407. Discount received, 1,895. Rent paid, 5,321. General expenses, 2,087. Office equipment at cost, 20,000. Provision for depreciation of office equipment, 4,580. Trade receivables, 9,710. Trade payables, 3,980. Inventory, 5,060. Bank overdraft, 450. Capital at the 1st of April 2023, 20,869. Drawings, 8,760. 68,652. 68,652. Errors which do not affect a trial balance. Which errors do not affect the trial balance? There may be errors even though the totals in the trial balance are equal. These errors might be spotted by other means. Control accounts, bank reconciliation statements. These errors cannot be ignored. They could affect the stated profit. They could affect the stated value of assets and liabilities. They could affect the balances related to other businesses. The 6 types of errors which do not affect a trial balance are: error of omission, error of original entry, error of complete reversal, error of commission, error of principal, compensating errors. Exam tip: you need to learn the names and definitions of these 6 errors. How do I correct errors using journal entries? You can correct errors by making the appropriate entries into the ledger accounts. The journal will be used as a book of prime entry. Enter the account that needs to be debited. It is conventional for debit entries to appear first. Enter the account that needs to be credited. It is conventional to indent the details for credit entries. Give a narrative for the journal entry. State correction of error. Give a brief description of the error. Error of omission. What is an error of omission? An error of omission occurs when a transaction is not entered into any ledger accounts. The transaction is omitted. It is possible that the transaction was not entered into the books of prime entry. The transaction is not included in the total for the debits and the total for the credits. The totals will therefore balance. How do I correct an error of omission? Enter the transaction correctly into the ledger accounts. You essentially just need to make the entries as normal. Make the journal entries. Worked example. Ashika is a sole trader. On the 1st of March 2024, Ashika identified an error where the sale of goods worth $200 to Kiha was not entered into the ledger accounts. Prepare journal entries to correct the error. A narrative is required. Answer. Journal. Date. Details. Debit. $. Credit. $. 2024. March 1st. Kiha. 200. Sales. 200. Correction of error of omission. Credit sale to Kiha not recorded. Error of original entry. What is an error of original entry? An error of original entry occurs when a transaction is entered into both of the ledger accounts using an incorrect amount. The same incorrect amount is entered into both the debit account and the credit account. It is possible that the amount of the transaction was entered incorrectly into the books of prime entry. The incorrect amount is included in the total for the debits and the total for the credits. The totals will therefore balance. How do I correct an error of original entry? Find the difference between the incorrect amount and the correct amount. Enter the difference into both accounts. To increase an amount, put the difference on the same side as the original entry. To decrease an amount, put the difference on the opposite side to the original entry. Worked example. On the 1st of March 2024, Ashika identified an error where the sale of goods worth $200 to Kiha was entered into the sales journal as $250. Kiha's account was debited $250, and the sales account was credited $250. Prepare journal entries to correct the error. A narrative is required. Answer. The amount entered was $50 more than the correct amount. Decrease both accounts by $50. To decrease the accounts, enter $50 on the opposite sides compared to the original entries. Journal. Date. Details. Debit. $. Credit. $. 2024. March 1st. Sales. 50. Kiha. 50. Correction of error of original entry. Credit sale recorded as $250 instead of $200. Error of complete reversal. What is an error of complete reversal? An error of complete reversal occurs when a transaction is entered into the wrong sides of both of the correct ledger accounts. The account that was debited should have been credited. The account that was credited should have been debited. The correct amount is included in the total for the debits and the total for the credits. The totals will therefore balance. How do I correct an error of complete reversal? Double the value of the transaction. This is because you need to apply the transaction twice. Once to undo the error. Once to make the correct entries. Make the entries on the correct side. This will be the opposite side to where it was entered. Worked example. On the 1st of March 2024, Ashika identified an error where goods sold to Kiha, for $200, were debited to the sales account and credited to Kiha's account. Prepare journal entries to correct the error. A narrative is required. Answer. An amount of $400 is needed to fix the error. Journal. Date. Details. Debit. Dollar. Credit. Dollar. 2024. March 1st. Kiha. 400. Sales. 400. Correction of error of complete reversal. Credit sale of $200 entered on the wrong side of the accounts. Error of commission. What is an error of commission? An error of commission occurs when one entry for a transaction is entered into an incorrect account but the type of account is correct. A debit entry could have been entered into the wrong expense account. A transaction could have been entered into an account for the incorrect customer. A transaction could have been entered into an account for the incorrect supplier. The correct amount is included in the total for the debits and the total for the credits. The totals will therefore balance. How do I correct an error of commission? Undo the entry in the incorrect account. This means making an equal entry on the opposite side of the account. Make an entry in the correct account. Worked example. On the 1st of March 2024, Ashika identified an error where goods were sold to Kiha for $200, but the entry was made in Dinah's account in the sales ledger. The transaction was entered correctly in the sales account. Prepare journal entries to correct the error. A narrative is required. Answer. Dinah's account has been debited by mistake. Undo the mistake by crediting Dinah's account. Debit Kiha's account. Journal. Date. Details. Debit. Dollar. Credit. Dollar. 2024. March 1st. Kiha. 200. Dinah. 200. Correction of error of commission. Credit sale was debited to Dinah's account instead of Kiha's. Error of principal. What is an error of principal? An error of principal occurs when one entry for a transaction is entered into an incorrect account and the type of account is also incorrect. A transaction for an expense could have been entered into an asset account. The correct amount is included in the total for the debits and the total for the credits. The totals will therefore balance. Exam tip. It is very easy to confuse an error of principal with an error of commission. An error of commission occurs when an account is confused with another account that has something in common. For example, they are both expenses, or they are both trade receivables. How do I correct an error of principal? You correct an error of principal the same way as you would correct an error of commission. Undo the entry in the incorrect account. This means making an equal entry on the opposite side of the account. Make an entry in the correct account. Worked example. On the 1st of March 2024, Ashika identified an error where $50 was paid for petrol, but the entry was made in the vehicle's account rather than the vehicle expenses account. The transaction was entered correctly in the cash book. Prepare journal entries to correct the error. A narrative is required. Answer. The vehicle's account has been debited by mistake, as this is an asset account not an expense account. Undo the mistake by crediting the vehicle's account. Debit the vehicle expenses account. Journal. Date. Details. Debit. Dollar. Credit. Dollar. 2024. March 1st. Vehicle expenses. 50. Vehicles. 50. Correction of error of principal. Vehicle expenses were debited to the vehicle's account. Compensating errors. What are compensating errors? Compensating errors occur when the effects of unrelated errors balance out when totaling the debits and credits. Example. A business sells $100 worth of goods to Steve and $200 worth of goods to Tony. The transactions were entered correctly into the sales account. Both Steve and Tony's accounts were debited $150. Overall, the assets have still increased by $300. How do I correct compensating errors? Correct each error separately. The total of the debits should equal the total of the credits. Worked example. Ashika sold $100 worth of goods to Steve and $200 worth of goods to Tony. On the 1st of March 2024, Ashika identified that both of these transactions were entered into the sales ledger accounts as $150. The transactions were entered correctly into the sales account. Prepare journal entries to correct the error. A narrative is required. Answer. Steve's account was debited $150 instead of $100. Therefore, credit $50 to Steve's account to reduce the balance. Tony's account was debited $150 instead of $200. Therefore, debit $50 to Tony's account to increase the balance. Journal. Date. Details. Debit. Dollar. Credit. Dollar. 2024. March 1st. Tony. 50. Steve. 50. Correction of compensating errors. Tony's account was understated by $50 and Steve's account was overstated by $50.